SK Ghosh is the Group Chief Economic Advisor at SBI, and he now joins in to give us a sense of what exactly that could mean. Thank you so much for joining in. The RBI governor proposed a rather big shift when it comes to the rate moves, saying that the tranches of the 25 basis points cuts or up move in the rates does not need to be sacrosanct. How are you reading into this movement, and is this some sort of a hint as to what may come in the upcoming policy?
Yeah, good morning. I think cutting rates by 10 and 25 basis points has been more. See, cutting 25 rates by 25 basis points has mostly been a DM construct and developing markets construct. The central bank, the Bank of China, the Central Bank of China actually used to do rate cuts in lower multiples, basically lower than 25 earlier. But the larger message which the governor is trying to give out is that whether it could be an 10, whether it could be an 15, or it could be an more than 25, so as to indicate a change in stance. Because I think for the last couple of months there has been a lot of discussion on the stance. We have moved from neutral to calibrated tightening to neutral, again to neutral now. So I think the market is a little bit confused at what could be the possible direction, and maybe to give a direction to that has been, the governor has underlined that. But actually it's an interesting point and we can debate on that. But generally it was the trend in some of the countries earlier. It's an DM concept, and there is no harm if you want to change that concept into an multiples not that of 25.
What are the likely immediate implications of this if it were to sort of be something that were to be taken into account and implemented down the line? What are the kind of risks perhaps that we see of implementing a flexible rate policy? Just take us through what the likely implications would be.
See, I think I'll just give you an historical context. The context is basically central banks now have become more transparent in their communication, and that also talks a lot about the central bank independence. So therefore, this entire logic of whether they need to cut it by 10 or 15 or they want to cut it by more than 25. But to me, what is more important is the communication to the market. For example, if you look into the Fed communication to the market, that has also significantly evolved over the years, as does the RBI. For example, if I take the example from RBI, from 2010, the RBI decided to give out this bi-monthly reviews. So that was one thing. And the Fed also at some point of time in 2013, after the crisis, it actually moved over from first generation signal, which means that typically not specifying the date, saying that rates could be on hold for an extended period, to specifying that rates could be on hold say till March 2013 or March 2017. So the central bank in India, the RBI, currently gives out forward guidance. If you look into the statement, you can see that it doesn't say much about how long the rates will be on hold or the rates could increase. And my sense is that through this communication which the governor has given out in the policy 2 days back, he is trying to imbibe a sense of communicating with the market, a proper sense that when the rates are going to increase or when the rates are going to decrease. This could be a form of a language, or this could be forms of a rate change. We can debate that, but at the end of the day, I think this is more of a communication with the market rather than the number itself.
I know you touched upon the overall growth comparison with China, but do you think that largely it is the need of the hour for India as well to shift their focus to high growth rates like that of China than remain near 6 to 7%? And even going forward, there would need to be more policies as well to help spur investment?
No, I agree with your point. I think growth is the need of the hour now. We have looking into the growth numbers very closely. We are looking into all the leading indicators very closely. And the most important thing is that if you look into the percentage of leading indicators which is showing an expansion of around 40 to 50 leading indicators, I think the percentage now less than 40%. So that means on an average the indicators are showing a distinct slowdown, and given the fact that global economy is also undergoing headwinds, there is a policy uncertainty in terms of the fiscal policy because we don't have a space for fiscal. So I think time has now come to support growth, and possibly the monetary policy could actually, and there has been several indications in the RBI policy document also in terms of how it can support growth. The number of times the word growth which has been used in the last two policies has been significant. So if I take all these factors into account, I think there is now one possibility of supporting growth more through monetary policy actions rather than through fiscal policy actions, on which the scope to me is limited.
Just, while we have you again on the latest macro data, once again setting a case for perhaps a further, accommodative stance from the Reserve Bank. We're also watching out for more data today on the WPI as well. Do you feel perhaps that we may see that another rate cut coming in sooner? In fact, that markets have already been expecting it, but what's your anticipation going forward?
No, we have been saying clearly that possibly a rate cut could happen in June, because the fiscal policy, the budget will be in July end by the new government, and I am not expecting too much from the budget. Maybe the fiscal deficit, which has been kept at 3.3%, maybe now it has moved to 3.4%. I don't see significant amount of downside to that 3.4% in the next fiscal year, given the so much amount of the revenue slippage, and the other things. So my sense is that it is better to front load the rate cut than to wait for the monsoon progress and the budget progress, because in August anyway you may not have an opportunity to front load the rate cut. So my sense is that cut the rate, front load the rate cut, and if the RBI or the governor has to be believed, we need to debate how this is going to communicate to the market, whether in terms of an increment of 25 or not in increments of 25.
Right. Okay, and finally, just to take then as well as to what you're looking at on the currency perspective as well. There has been a task force that's been constituted by the Reserve Bank to study the offshore rupee market. That in the past has proved to be a bit troublesome for the currency markets in India. In light of all of these steps that has been taken, what is your assessment of the rupee?
See, very honestly, I think the rupee moves actually has puzzled the market. After the swap was announced, the rupee appreciated significantly. Now the rupee is actually showing a declining trend, possibly because of the adverse news on the capital inflow fronts, because now the Arcelor capital inflows might not come in quickly. But my sense is that rupee is likely to remain range bound till elections, maybe around 68.5 till 70, and after election we may see some sort of a movement in the rupee value. Perhaps the rupee could depreciate a little bit after elections if taking into factor all the news.
Thanks so much for joining us today, Mr. Ghosh, and taking us through all the latest when it comes to comments from the governor, policy, expectations, and the macro environment. In fact, our consulting editor, Maithili, has